Welcome to the Hill & Viteri Property Market Roundup for the October to December quarter of 2020. So, 2020 has finished at the frenetic pace that it opened with in our local area. In our last market roundup, we commented on the returning of buyer confidence in the housing sector. Well, it'd be fair to say that this trend has continued, with the landscape shifting rapidly in this period, despite the potential economic storm on the horizon. Our auctioneer Michael Verley from MVP Auctions reported a clearance rate of 82% in the quarter, with buyer demand heavily outweighing supply. This lack of supply and heat in the market is now seeing buyers rush in before they are potentially priced out. It's really hard to believe that it was only 3 months earlier that buyers were leveraging the prevailing conditions for heavily discounted prices. An example of this change is best illustrated with the auction of 25 Rossford Avenue in Janelli back in mid-October. This property had over 150 inspections, 50 plus contracts issued, and pre-auction offers ranging from $780,000 to $870,000. These offers were comparable to recent sales in the area for similar properties. However, this auction saw 25 buyers register and the property sell for $1.1 million, being $200,000 over reserve. This strong buyer demand driving the price. It was promising to see this trend continue through the quarter with a number of strong auction results. Entry-level homes like 68 National Avenue in Loftus sold for $1,227,000 and 19 Charles Place just before Christmas for $1,155,000. The apartment market has started to follow suit, with recent sales now benchmarking above the previous sales. It appears to me as though the strata market will follow the housing market and rebound through the first quarter of 2021. Although it's unlikely to see the same gains as houses due to the continued absence of investors and the volume of supply from new developments. It appears to me Sydney property buyers are being lured back into the market with low interest rates, government incentives and the easing now of COVID-19 restrictions. According to Doran Pellig of Riskwise, Sydney is projected to deliver an 8 to 12% capital growth in 2021. ANZ have now reversed their predictions and reporting a possible 9% increase, along with SQM who have forecasted a 7 to 11% increase for 2021 also. In the rental market, it's been widely reported that rents have declined in some of the southern Sydney regions of around 4%. However, we have not experienced that locally ourselves. Lee Anderson, our head of property management, advises that increases have been few and far between. However, we've been able to maintain rents for our landlords in most cases. So I would say, based upon this information, that the housing sector is now a seller's market and the apartment market is more of a normal or balanced market. What I have noticed though is the gap between apartments and houses is widening. Now, there are a number of commentators agreeing with the signs but placing caveats on certain factors. Gareth Aird of CBA is quoted saying this: "Provided transmission of COVID-19 in Australia remains low, particularly community transmission, the strength of the economic recovery in 2021 will surprise many." However, other economic commentators are still uncertain, noting that we have not yet seen the impact of the removal of government buoyancies. I guess we will just have to wait and see. I'd like to personally thank you for taking the time to watch our quarterly market roundup. If you have any questions about the market or your own property, please feel free to reach out to the team and we're more than happy to help. Thank you.